if we have a little high oil prices for a little while, but as soon as this ends, those prices are going to drop, I believe, lower than even before.
Safe harbor. Donald Trump says the U.S. will provide insurance guarantees and naval escorts for oil tankers in the Strait of Hormuz. As traders remain skeptical, oil flows will return to normal levels quickly. Market meltdown. Stock sell-off in Asia as investors grapple with Iran uncertainty. South Korean equities post their biggest two-day drop since the great financial crisis. And Israel has reportedly attacked the Iranian clerical body tasked with choosing the next supreme leader as Tehran steps up attacks on U.S. assets in the region. This Horizon Middle East and Africa has just gone 9 a.m. across the Emirates. I'm Jumana Bersechi in Dubai. It is day 5 of the Iran war. And what you saw yesterday were global markets reacting to what is happening in this region. A sea of red out there, especially with the handover from Asia this morning. Take a look at the Asia-Pacific index. This is the index as a whole. It is down almost 4% in trading today. So we are seeing a lot of selling going through. In a moment, we're going to talk to our colleague in Asia about the price action in the KOSPI. Just tremendous day-to-day losses there. And in fact, the biggest two-day drop for the KOSPI going all the way to the great financial crisis in 2008. So there's a lot of position trimming that is going on in Asia this morning. S&P futures also leaning towards another session in the red, down 0.4%. Yesterday, as I said at the top, it was the first day that really you started to feel global markets price in the global implications of what's happening in the region. And this new term that has appeared as well, warflation, and that what we're seeing happening in commodities markets, the shooting up of energy prices, is going to have global ramifications on the economy when it comes to the inflation outlook and also potentially supply chain disruptions too. So something to think about, obviously, in the coming days. S&P futures leaning towards the red. And then take a look at European markets today. They are seen opening up in positive territory, but yesterday, the US Stocks 50 absolutely plunged, down 3.6%. Similar fall for the FTSE as well, down 3%. And at the same time, not shown here, but yields continue their rise as longer-term yields accounted for higher inflation and higher inflation trajectory. Let's switch over and talk about other assets, though. Of course, oil continues to be top of mind. Lots to talk about there, but essentially, net, we are still seeing Brent trade above $80. So 82.5 as we're up 1.4% higher, despite the fact that President Trump was seeking to calm and reassure shippers and ships and vessels that wanted to pass through the Strait of Hormuz, offering naval escorts and lower insurance costs. But that didn't really make an impact on the market because they're still concerned about security and safety, ultimately. Gold also seeing a flight to quality bid this morning, up 1.3%. We are above 5,100 here, so continues to be a beneficiary of all the uncertainty around. 10-year yields continue their march higher, as I just mentioned. Yields moving higher to account for this possible cost inflation push. And then the USD also seeing back-to-back gains. The two-day gain for the USD so far has been the most this year. So we are seeing back-to-back gains for the greenback. Okay, let's also check in on how markets in Asia are faring. It has not been a pretty handover today. Winnie Su is in Hong Kong for us. And Winnie, just talk us through exactly what is going on with the KOSPI today.
Yeah, morning, Jomana. As you can see on the board, we are seeing a lot of panic selling when it comes to the South Korean market, and especially with also these margin calls accelerating that downward pressure and even triggering a 20-minute trading halt when it comes to the KOSPI and also the KOSDAQ. And when it comes to the movement of the benchmark, we're looking at the KOSPI here down about 10% and extending losses from yesterday down already for about 7% or so. And as you mentioned, it is headed for that big two-day decline since 2008 or so, but also in the technical territory, the correction level, and leading losses today, as you can see, Samsung and SK Hynix, but they're actually down about 15% already yesterday. So yes, it is a lot about that geopolitical tension when it comes to Iran, but also these top performers and top performing markets are getting a big hit because of how they have really really rallied through when it comes to the AI demand. Now, flip the board and take a look at the broader Asia market. Yes, you've mentioned the MSCI Asia here down about 4%, but that is the biggest decline since April. Similar losses we're seeing in Japan and Taiwan as well. When it comes to Hang Seng Index, down about 3%, also entering a technical correction level. When it comes to onshore CSI 300 benchmark, raising all year-to-date gains ahead of the MPC meeting. Indian stocks coming back online after the holiday yesterday, down about 2%, but the rupee in fact actually hit another record low here. Back to you, Jumana.
Yeah, well, also, I mean, accounting for two risks there. Number one is the reverberations of the AI trade. And then in addition, Asia continues to be the biggest buyer of oil coming from the Middle East region. So the knock-on effects extreme, as we're seeing this morning, from that effective closure of the Strait of Hormuz. Thank you, Winnie Su in Hong Kong. Well, President Trump says the U.S. will provide insurance guarantees and naval escorts for oil tankers in the Strait of Hormuz. His comments come as attacks on Iran continue to escalate, with the Israeli military appearing to have attacked Iran's Assembly of Experts, the clerical body tasked with choosing the next supreme leader. Tehran has also continued to strike parts of the region, including a reported drone attack on a CIA station in Saudi Arabia, as well as the U.S. consulate in the UAE. But Trump has expressed concerns that strikes against Iran could lead to a new leadership that's equally troubling to Washington.
I guess the worst case would be we do this and then somebody takes over who's as bad as the previous person, right? That could happen. We don't want that to happen. It would probably be the worst. You go through this and then in 5 years you realize you put somebody in who is no better. So we'd like to see somebody in there that's going to bring it back for the people.
Joining me now is Stuart Livingstone-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia, and from Jerusalem, Bloomberg's Dan Williams. Stuart, let's start with you. One of the big announcements overnight, President Trump saying that the U.S. are planning on providing insurance guarantees and naval escorts to ensure the safe passage of vessels and ships that want to pass through the strait. Experts seem to be quite dubious about the implementation of all of this.
Yeah, and I think they're right to be. It's going to be quite a logistical challenge. It's going to take, you would imagine, several weeks. And then even if you get the Navy escorts going through, which definitely will help, it's still going to be a slow trickle. Nothing like the volumes that we would be used to. And the logistical challenges beyond that are they need to make sure that the Iranian Navy is fully obliterated. And our understanding is that a great deal of it is already in that state. And then they need to be very careful about any shore-based equipment, you know, thinking specifically about the Houthi example where you don't necessarily need ships to take out shipping. So it's going to be difficult. The insurance element also pretty important. But again, it's an untested system with this particular body that he's put forward to do it. So again, we'll see.
Yeah, and just this morning, a few minutes ago, a headline came out saying that Iran guards say, they're claiming that they have, quote, complete control of the Hormuz Strait. So still, it just puts under spotlight the risk that some of these navals are putting themselves through, passing through the strait. Dan, let me get out to you, because what we are seeing is continued joint Israeli and U.S. strikes on Iran. The Central Command now saying that they've hit more than 2,000 targets since the inception of the war. Walk us through the latest.
Indeed, and the Israelis are now fighting fully on two fronts, not just joining U.S. forces in attacking targets in Iran, but also attacking Hezbollah in Lebanon. That front opened up 2 days ago when Hezbollah fired rockets at Israel in retaliation for the weekend killing of the supreme leader of Iran. The Israelis, like the Americans, are saying that they're willing and ready to go into this for the full stretch. And Iran and Hezbollah are firing back. Just an hour ago, I was down in the shelter with my neighbors. An early morning siren summoned us there. The damage appears to have been limited. Nonetheless, the Iranians and Hezbollah are keeping up a decent cycle of fire from their perspective, albeit tapering off compared to the early days of this war. That tapering off suggests either a husbanding of a dwindling arsenal, or perhaps indeed that arsenal is simply being cut back successfully by the Americans and the Israelis. A basic back-of-the-envelope calculation, given what we've been told about their arsenals, suggests they only have supplies to last a few more days at this rate of fire.
Okay, that's interesting what you're saying there, Stuart. Let me bring that to you, and that the volley of attacks, the frequency of attacks seems to be lowering in intensity over the last couple of days versus, say, the first 2 days. And yet, they continue to target key U.S. assets. We saw it targeting the U.S. consulate in Dubai yesterday, CIA facilities also in Saudi Arabia. I mean, how is this all shaping the Gulf states' response?
Yeah, so I mean, in terms of the equipment being used, yes, you're absolutely right. There seems to be fewer missiles, both ballistic and cruise. But what we are seeing is continuing drone attacks. Now, remember, these drones are incredibly cheap to produce, and we just don't know how many Iran has. Conceivably, it could be producing many, many every day.
And these are the Shahed drones?
Yeah, that's amongst those kind of those models. But in terms of the Gulf reaction to this, you saw that statement from the GCC ministers on Monday, in which, they were quite explicit. They said clearly diplomacy is their favoured approach to this, which is exactly in line with everything they've been saying in the run-up to this war. But they were also very clear that, they reserve the right to defend themselves if it came to that. So we've had no definitive signal either way on this, but it's clear that they are getting increasingly frustrated and angry with what's happening.
Yeah. Dan, let me come back to you. You mentioned earlier when we were talking about the Israeli ongoing operations in Iran, but also the new front that has opened up in Lebanon, a further attacks taking place on one of the southern suburbs of Beirut overnight in the early hours of this morning. Talk us through what the Israeli war objectives are in Lebanon.
I think the war objective is to end this war, whenever it does end, on a footing that would be dramatically different from what had been seen over the last decades. The Israelis, in fact, this entire conflict arguably was triggered by the Hamas attack of October 7th, 2023, which really did blindside Israel and caused a seismic shift in strategic thinking. The Israelis decided to take the fight to the enemies, and now obviously we've seen it cascade and evolve and engulf much of the region. And given that for years now, Hezbollah was really the most effective cat's paw for the Iranians in Israel's immediate vicinity, in Israel's neighborhood, just over the northern border inside Lebanon, the Israelis were concerned that Hezbollah should be neutralized, should be defanged. They achieved that to a degree before a U.S. brokered ceasefire came into effect in October 2024. However, in the interim between that ceasefire and this weekend, the Israelis kept up pretty much daily attacks on Hezbollah to prevent what they said was Hezbollah re-entrenchment in the south of Lebanon, the former Hezbollah fiefdom. Now it appears the Israelis haven't been given a reason by Hezbollah launching those rocket attacks 2 days ago, are intending to go in and finish the job by either physically destroying this group or forcing Lebanese authorities to go in and dismantle the group. That was also a provision of the ceasefire, given that Hezbollah might actually eventually be weakened enough so that Lebanese authorities feel emboldened and capable of taking them on.
Yeah, well, that was key to that announcement out of the Lebanese government 2 days ago, outlawing essentially Hezbollah military activity. Stuart Livingstone-Wallace, Bloomberg's executive editor for Middle East, North Africa, and Russia, and Dan Williams in Jerusalem. Thank you so much. All right, let's take a quick look at how oil is reacting to all of the latest. And, of course, the big news being that President Trump said the U.S. is offering to provide insurance guarantees and naval escorts to ensure the safe passage for oil tankers and other vessels through the Strait of Hormuz. It hasn't done a lot, though, to the price of oil. You can see we're up another 1.6% today. So yesterday's moves north of 10%, and we're just building on those gains now, sitting just shy of $83 a barrel. All right, joining us now is Vincent Juvyns, Chief Investment Strategist at ING Belgium. Yesterday, Vincent, you really felt the global reverberations of the ongoing war in Iran and the region. It is obviously now a broader regional conflict, but also having huge ramifications across energy markets. How should investors be reading the knock-on effects?
Well, first, Jumana, I thought as we all in the region and with all the people which are concerned by this painful situation, it's easy for me to address the situation from Europe from a market perspective. But indeed, investors, as you said, are clearly selling their position this year indiscriminately. You see it this morning in emerging markets. Clearly, it's profit-taking across the board, indiscriminate. This said, when I look at equity market and oil market, they're really looking at a different story. Yes, oil prices are above $80 per barrel at the moment, but in my mind, this doesn't really integrate the idea that the Strait of Hormuz would be blocked for a long period of time. Clearly, that's the lower end of our base case. This clearly integrates a $20 risk premium, you may say. It's clearly I integrate the idea that it will be a conflict which is temporary and of low magnitude. So we will see. But market clearly on the equity side are looking at emerging market and Europe, the two best performing markets year to date and are taking profit. Even gold yesterday suffered some profit taking. So few hedges left for investor. Gold is responding a bit better this morning. You have some fixed income market, but it's really a painful environment for investor at the moment.
Yeah, is this an environment where investors are just looking to trim the profit-making trades of 2026 so far? Is that why you're seeing some of the main winners, to your point, like the KOSPI, like some of these Asian indices, like gold, come under selling pressure? I mean, gold pales in comparison to the price action that we're seeing in KOSPI today.
Yeah, for sure. So gold was up more than 20%, emerging market roughly 15%. So obviously risk is taken out of the table, profit have been taken. For sure, I would expect this movement to continue as long as we don't have clarity on the situation in the Middle East. Of course, the discussion overnight about providing insurance or protection to vessel in the Strait of Hormuz is probably a step in the right direction. But you know better than I do that the situation will probably remain fluid in the coming days, and that we see only very few vessels will pass by, which is in Europe a major issue, not only for oil but for gas. Here in Europe, I can tell you the concern is the massive increase of gas price that we haven't seen since the Ukraine crisis. It's the end of the winter, luckily, but people are quite concerned that this will obviously fuel inflation and hence also lower GDP growth going forward.
Yeah. You know, Vincent, at the beginning of this year, I would say the narrative was that you were going to get a new dovish Fed chair and that the Fed were going to proceed with their interest rate cuts at a time when the U.S. economy is kind of doing okay, sort of like a Goldilocks scenario for markets. Now you fast forward on, and it appears very much to be the case that if we are in for a protracted conflict, then you are going to see sustained pressure on energy prices and possibly even reverberations on the supply chain as well. Does this completely upend the narrative for markets? Do you think markets are actually priced for the possibility of a sustained inflation shock similar to what we had in COVID?
The market were definitely not, and I'm thinking probably more about Europe in this respect, where the hit in terms of inflation will be obviously more pronounced. We are not self-sufficient like the US, obviously, so clearly an energy crisis will be more painful for us. And Europe obviously was one of these places where the performance was the best year to date. So market obviously will change their narrative. Goldilocks is obviously off the table at the moment. I've seen on Bloomberg warflation or stagflation is a term that you hear more and more. We're probably not there yet, but clearly markets are probably a too optimistic picture for 2026, and we knew that a couple of geopolitical events were still on the table. And yet it came from the Middle East this time around. This was to some extent expected. I would say everybody is still positively surprised by how market behave at the moment, despite the heavy loss this morning in emerging market. So far, the impact has been relatively muted, especially when I look at oil price, which again remain at the lower end of what you would have expected as a trading range in the current situation. They definitely not discount a full blocking of the Strait of Hormuz. There we would look at $100 per barrel or even above, which would be a shock for countries like Europe and emerging markets.
Yeah. Well, we're getting closer. $83 now. Vincent Juvyns, ING Belgium, Chief Investment Strategist. Thank you so much for joining us on the show. U.S. President Donald Trump has expressed concern that the strikes against Iran could lead to a new leadership that's equally troubling to Washington as the regime, the U.S. and Israel are fighting to topple. It comes as the U.S. Senate is set to vote on war powers resolution later today. Joining me now is Jamil Jaffer, founder and executive director of the National Security Institute. Jamil, Good to have you with us. I see that you worked under the Bush administration, and you bring a wealth of expertise to the conversation that we're having today. I'm going to start off by asking you whether you think and believe that this is a war of choice or a war of necessity for the U.S.
Well, look, Iran has been killing Americans for many, many years. They've been seeking to obtain a nuclear weapon for many years. They've been a supporter of Hezbollah, Hamas, Palestinian Islamic Jihad for decades. In a lot of ways, this war has long been coming. Whether it was a war of choice or necessity right at this exact moment is something historians will debate for a long time. But the reality is that Iran has been at war with the U.S. for the better part of multiple decades. We simply haven't been at war with them. This war has now been brought to them.
Okay. The administration has offered various war objectives, including destroying Iran's missile capabilities, wiping out the Navy, preventing it from obtaining a nuclear weapon, and ensuring it cannot continue to support allied armed groups. Can they get that done in the next few days, do you think? Or is this going to take weeks, possibly even months?
Yeah, I mean, I think this is a long-term operation, to your point. I mean, the president said it himself that he anticipated initially that this effort would take 4 weeks. He said it's going a little faster than expected, so maybe he anticipates it'll go a little bit longer, but his initial bid was 4 weeks. I think that's probably a reasonable thing from the air. The question is what do you do about some of the nuclear elements that are deeper in tunnels that we know that we haven't reached with the massive ordnance penetrator that may not even be reachable with that? Are these Israelis going to put a small, limited number of elite forces on the ground or use proxy forces in the country to go after those material? And then how do you really decimate the Iranian Revolutionary Guards? They're a huge force. The Quds force is an elite force. They know how to hide. It's a very hard thing to do.
Yeah, it is a hard thing to do, which, again, brings me to my next question, which is, what do you make of President Trump suggesting that he has openness, potentially, to cut a deal with a more, quote-unquote, friendly leadership in Iran? How does that work out if you juxtapose it with, this appetite for regime change?
Well, this is the challenge. You got to figure out what that friendly leadership looks like, right? It's obviously not going to be any of the immediate clerics that we're talking about unless the administration's already been in conversations with somebody. It's hard to see who in this regime structure might be that moderate party that would agree to give up nuclear weapons, give up nuclear enrichment, give up their support of terrorist groups and the like. That seems hard to imagine. So then you're talking about outside groups or folks, folks within. There's talk about the U.S. Army and the Kurdish groups in the north. We'll see if any of that's accurate. But the truth is, you have to have somebody, a figure or a group of figures that can actually take the government and take charge and then deal with the fact that the Revolutionary Guards are still there and may go into a insurgency posture like we saw in Iraq. That is a very difficult problem to solve, and one that without forces on the ground, we saw what happened in Iraq with a huge number of U.S. forces on the ground. Trying to do that all from the air or through covert action is not an easy thing, again. So a lot of the problem here, to your point, is the strategic question of how you actually set up a succession that's successful, a replacement government and the like, particularly when you're saying you don't want regime change or you want it brought on by the people, you're not going to do it yourself. Well, then how do you get the regime you want? It's just hard to understand how that exactly happens.
Yeah, and I know that there's going to be a Congress vote later today, but it's unlikely to go against the president, given the Republicans have a majority. But if you look at all of the polls, it would suggest that the U.S. public does not endorse a U.S.-Iran war. They are in majority opposed to it. And as you see the number of casualties beginning to mount, I believe it is 6 servicemen now who have lost their lives. 3 American fighter jets were shot down in friendly fire in Kuwait. I just wonder how long the American public will have the appetite to stomach a sustained conflict if it is going to take weeks.
Well, look, I think there's a question about leadership, right? If the president leans forward and says, this is what I expect to happen, this is how I want to run, I think it's going to be very hard for members of Congress to go against that. You just pointed out there's going to be a vote. It will get some collection of Democrats and Republicans. It will be bipartisan, but it won't ultimately succeed. It won't get a majority in the Senate. It might get a majority in the House. It'll be close, but it won't be enough even to sustain. Even if it passes the Senate and the House, the president would veto it. It wouldn't pass. And so as the leader, the president can bring the country with him, even if it is unpopular. But over time, the thing about President Trump is he cares a lot about what the American people think. And if he starts to see a loss of public support, his ability to support the war may decay. But right now, he seems committed to the course. He seems focused on it. And he seems like he's going to drive forward regardless of where the poll numbers look. But to your point, that may not last forever.
Yeah, well, let me ask you this. What do you think is more important to the U.S. administration here, achieving those defined or semi-defined war objectives in Iran, or maintaining a lid on gas prices and oil prices at the pump for U.S. consumers?
Well, I think it's both. I think the reality is the president's coming up on a midterm election. He needs to try and maintain control of Congress. So it's gonna matter to him. Oil prices and gas prices at the pump, other types of inflation. So those things are all going to matter. You can't deny with an election coming up in November that's going to matter. At the same time, the president has begun this course. He's committed to this course. Whether these are the right objectives or not, this has been an evolving set of objectives from the first day. The president listed out, here are the objectives. Then you had the Secretary of Defense give out a few other ones. The president's come back. Marco Rubio set out different ones. So the question of why we're at war and what the goal of the war has changed over time. And so we'll see that continue to take shape over the next few days and weeks. But at the end of the day, what the president said early on before this conflict even started was he was going to send help to the Iranian people. That help was on the way. And if this regime doesn't ultimately go down by whatever force, President Trump's going to have a lot of explaining to do, both to his base about why he picked this conflict and to the rest of the American public about why we got in this and what the result is.
Yeah, Jamil, really good to get your perspectives. Thank you so much for staying up late for us. Jamil Jaffer, founder and executive director of National Security Institute. And let's take a look at markets. Futures are plunging, and that has been the case in the last 24 hours. The handover from Asia-Pacific, brutal this morning. The KOSPI index down 10% today in trading. A sea of red out there. We'll talk more about it in a moment. But coming up, we're going to be speaking to Dalia Fahmy from Long Island University about the war stepping up as non-military infrastructure is also targeted. That's next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Safe harbor. Donald Trump says the U.S. will provide insurance guarantees and naval escorts for oil tankers in the Strait of Hormuz. As traders remain skeptical, oil flows will return to normal levels quickly. Market meltdown. Stock sell-off in Asia as investors grapple with Iran uncertainty. South Korean equities post their biggest two-day drop since the great financial crisis. And Israel has reportedly attacked the Iranian clerical body tasked with choosing the next supreme leader as Tehran steps up attacks on U.S. assets in the region. It's just gone 9:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. Well, red on the screen, risk-off, heavy selling in Wall Street and also throughout the Asian session. The handover from Asia-Pacific Index, take a look now, down 4.5%. We were speaking about this earlier with Winnie. The KOSPI down 10%. Its biggest two-day decline since the great financial crisis. You have to go all the way back to 2008 to see a move like this. So really heavy selling going through in the Asian session as investors really come to grips with the expansion of the war and the conflict in the Middle East and what that means also for energy and for supply chains around the world. S&P futures tilted to open up negative as well, down 0.6%. European markets, we saw a very deep day of reds yesterday, heavy day of selling coming through. It ended the day down 3.6%. Similar moves for the FTSE at end of the day yesterday, down 3%. Today stabilizing somewhat, so relatively outperforming to Asia and U.S. futures as we head into the beginning of the European session. Also bear in mind that we continue to see yields ticking up. I'll get to that in a moment. But let's switch over and take a look at where oil is trading, because the main news overnight, obviously, being President Trump announcing that help is on the way for vessels and tankers that want to pass through the Strait of Hormuz in the form of naval escorts and lower insurance prices. But I think there were some questions about the exact implementation of all of that and whether it's feasible over a short-term horizon. And so oil markets brushed it off. I mean, we're back basically above $83 or close to $83 now, 1.9% firmer on the session once again. So oil continues to march higher. Gold also seeing a bid for it this morning, up 1.4%. 10-year yields, I mentioned a short while ago, continue to move upwards as well as markets price for this inflation push coming through from higher energy prices. And then the USD up 0.2% today. The two-day gains for the dollar the most in 2026. Okay, let's talk more about how some of these markets in Asia are faring. Winnie Su is in Hong Kong for us. It is really not a pretty day out there.
Yeah, exactly, Jomana. As you mentioned, for Asian stocks, it really is a broad and also deep sell-off that we are seeing. And in fact, it's really been driven by all these different factors you've mentioned, the surging oil price and also the stronger dollar weighing on Asian equities as well. When it comes to Thailand's benchmark here, in fact, down about 8%, and it just triggered that trading halt just now. However, when you look at some of the other benchmarks also under pressure with the Hang Seng Index, down about 3% and entered a technical correction level, down about 10% since its January high. Onshore CSI 300 benchmark, it raised all gains so far this year, ahead of the MPC that we're closely watching. And Nifty, India's benchmark, also down about 2%, coming back from a holiday with the rupee at record low. And that's also because, as we discussed, that oil, in fact, is India's biggest import, and hence lots of pressure when it comes to surging oil price. Now, flip a board and take a look at how we are doing when it comes to South Korea's market. KOSPI here down more than 10%, extending losses after having fallen about 7% already. And again, it is in that technical correction level. KOSDAQ also similarly down more than 10%. So it is a lot of panic selling, but also lots of margin calls accelerating that downward pressure that we are seeing and leading losses. Samsung and SK Hynix, these are the AI darlings that have really performed so well in the past few months on that AI demand. So we're seeing lots of profit taking just driven by these geopolitical tensions that we are seeing right now. Back to you, Jomana.
Winnie, thank you so much. Winnie Su in Hong Kong. Gulf states are being pulled deeper into the war with Iran as Saudi Arabia, Qatar, and the UAE suffer attacks on non-military targets. Tehran has struck U.S. embassies in both Riyadh and Dubai, while airports have also been damaged. To discuss further, joining us is Dalia Fahmy, Director of International Relations and Diplomacy and Associate Professor of Political Science at Long Island University. Dalia, thank you so much for joining us on the show today. What do you make of these ongoing Iranian attacks at the Gulf states, and how critical is the risk of escalation coming through from a Gulf state's response to these oncoming attacks?
We're already seeing escalation. So initially in the first couple of days, we saw Iran striking the U.S. military establishment in the Gulf countries. It increased it to attacking oil refineries and now the consulates, and then attacking other parts of Kuwait. And so we were already seeing escalation. But if you take a step back and think about what is happening, it's not just the energy crisis, but it's kind of a strategic reorientation of the role of the Gulf countries. We saw something really critical happen about 10 hours ago, where satellite images, for example, showed that the ANFPS 132 phase array radar in the Udeid Air Force Base in Qatar was destroyed. Now, this is the satellite imagery where the radar actually is the one that's supposed to intercept. And so the major military part, U.S. military part meant to protect in this area has already been destroyed. I think the UAE Foreign Ministry put out a statement yesterday that is really important for us to look at, where, and I quote, he says, the UAE voices its firm rejection of the use of the territories of the country in the region as arenas for settling scores or expanding the scope of the conflict. We saw similar statements from the Foreign Ministry of Qatar. We saw a similar statement come from the Crown Prince of Saudi Arabia. And so what became increasingly clear is that the grand bargain that Gulf countries struck with the United States for decades, that if they host American military bases, they will have security, is not rendering the deal as complete as they thought it once was, where we saw that the attacks on the U.S. military establishment is leading these countries to become increasingly insecure, drawing them into a conflict that they didn't agree to be in.
Yeah, and becoming vulnerable due to the very presence of those U.S. assets. What is the likelihood, in your opinion, of some of these states choosing to get involved militarily in the war?
They might get militarily involved to protect themselves, because we heard a couple of accusations today from some Gulf leaders that the U.S. is not responding as swiftly as they think it should. But if they pull themselves in a more in strategic response, then Iran could leverage some more of its power. We have been talking about Iran being significantly weakened, while its ballistic missile capacity has been weakened and its naval fleet has perhaps been destroyed. Its capacity to actually produce more Shahed drone missiles very cheaply is still possible. And so Iran could be in this for the long haul. What we do know about the United States bases in the UAE and in Qatar is that they're running low on munitions, running low on cruise missiles, on Tomahawks, on Patriot missiles. And so the U.S. was not really prepared for the long haul, even though President Trump said that he's in it for 4 to 5 weeks and we're ready. We saw an emergency appropriations bill go through today to actually resupply, through Congress, to actually resupply some of these missiles. And so these Gulf countries might have to actually step up, because the U.S. is not ready for a 4 to 5 week war or even beyond that.
Yeah, so interesting what you're saying there. Would you then describe this as a war of attrition, and just to see who can hold out longer? And one thing that we've noted, and earlier on in the show we were talking about it, is that the intensity and frequency of the incoming missiles and drones to the Gulf states has started to diminish in the last couple of days, which suggests either that Iran are beginning to run out, or they're spacing it out because they do see this as a protracted conflict.
There were strikes in the past couple of hours. However, it's about whether Iran is willing to take the long haul. Look, they're in a corner. They have nothing to lose. Now, is the U.S. ready for the long haul? If you look at the American public, 60% of Americans, according to a CNN poll from yesterday, disagree with this war. We saw 4 American service members killed. And the fact that there's friendly fire deaths harkens back to a time period where the U.S. engagement in 2003 in Iraq was full of friendly fire deaths. The American public is not willing to go through a long, drawn-out war. For example, today there are primary elections in 3 key Republican states, and it looks like the Republican incumbents are going to lose those elections, meaning that the American public doesn't have the stomach for this war. And so while the American president might be saying we're in it for the long haul, it's not clear that someone like him, who cares about poll numbers, who cares about the price of oil, and who cares about the stock market. And we saw that it's been the greatest drop in a single day since 2005, that he's going to be in it for the long haul, even if he says he is.
Dalia, thank you so much for joining us. Dalia Fahmy, Director of International Relations and Diplomacy and Associate Professor of Political Science at Long Island University. Well, coming up, oil and gas continue to jump as the conflict in the Middle East widens. More details on that next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Oil jumping again as fresh attacks flare up in the Middle East. Traders also weighing a U.S. plan to insure and escort tankers passing through the Strait of Hormuz, where traffic is pretty much halted. Meanwhile, gas prices are also surging to multi-year highs. For more, Stephen Sachinsky, who leads our Asia Energy team, joins us now. Busy time to be focusing on the energy market, that's for sure, Stephen. So let's just start with this announcement out of President Trump overnight that they are looking to provide naval escorts and lower insurance costs for vessels that do want to pass through the Strait. Big announcement, of course, but I think there was some skepticism in the market as to how or whether it actually will be implemented. Does that explain why oil is brushing off the news this morning?
Yeah, I think that clearly what the oil market is saying is they'll believe it when they see it, right? The ships are stuck there. They're not moving. until there is actually a naval escort, until we've actually figured out the insurance issue with the ships. You know, their war insurance, it's ending on the 5th, right, on March 5th, and they've got to figure out, they've got to scramble to find different insurance. Insurance rates are rising. Certain insurers might not be able to provide the same sort of coverage. There's a lot of confusion around that. And while Trump can pay lip service and say that he's going to help solve this problem, until there actually is a solution, I don't think the market is really going to react very much to those words.
Okay, so let's talk about the oil dynamics here. I thought it was really notable that Iraq said that they're going to have to start cutting or reducing production because their storage levels have reached capacity. And what you're seeing is some key OPEC producers having to rethink not just production, but exactly how they get the oil out of the region.
Oh yeah, absolutely. I mean, I think one of the, when you're talking about how they get oil out of the region, one of them, of course, famously would be Saudi Arabia, the largest producer in the region. They normally kind of ship it out of the Persian Gulf, and they would have to go through the Strait of Hormuz or that region. But, you know, they're thinking about potentially looking at shipping it on the other side, the Red Sea, and exporting it there. Now, the Red Sea, of course, has their own issues, but that doesn't have the bottleneck that we're facing at the moment with the current crisis and conflict stemming out of Iran. I think what's very interesting is there are two problems that the market is really closely looking at. You don't just have the issues of transportation and logistics, right? Strait of Hormuz, big issue, can't go through at the moment. We've discussed that, as well as, you know, whether ships are willing to go there. You've also got, because this conflict has increased across the region, you've got small attacks with drones or intercepting drones, damaging oil fields, damaging infrastructure to a degree that we just haven't seen in decades. And so because of that, the market is trying to weigh both of those things. So you've got to figure out, okay, you've got the logjam of facilities and the logistical issues, but then you also have facilities that might not be able to operate or are operating below capacity because they have to shut due to damages.
Yeah, and I should say also on that point, and let's pivot and maybe talk about the gas markets now, because the price rises there have been nothing short of astronomical the last couple of sessions, namely on back of the news that Qatar Energy has suspended the production of LNG, and we still don't have an update on what's going on there. Are the dynamics of the gas market different from oil in that, number one, it's very difficult to find an alternative route to get the gas out to customers, and number two, the inventory situation, especially for many of these European buyers, suggests that they don't have a lot actually of inventory, and they will scramble to buy gas at potentially a lot higher price later in the year.
Yeah, I mean, I think there are just absolutely different dynamics playing from gas to oil. So for gas, Qatar, world's biggest LNG exporter, it provides 20% of global supply. Now, there are other, in the oil market, there are other kind of levers that you can pull. You can get different, you know, there's a vast fleet of thousands of ships. LNG, there are only like 700 or 800 LNG ships. So there's not a lot of supply on the water. Plus, there are very few levers that you can pull in terms of increasing output. Right, there is no spare capacity available in the LNG market. The U.S. is boosting production incrementally. A lot of that LNG goes to long-term buyers. Australia, the third largest LNG exporter, they can't really increase it. Southeast Asia, those exporters are dealing with their own demand issues, and they can't increase output because they've got to feed consumption at home. So you've got the situation where the market just doesn't have that much more elasticity. At the same time, you're right. The logistical issues, you can't reroute LNG. It's got to come from the plant. And so it has to go through the Strait of Hormuz, and that's not an option at the moment. Plus it's you know, shut down for safety reasons.
Yeah, Stephen, thank you for bringing us the insight and perspectives on what's going on there. Stephen Jasinski, who leads our Asia Energy team. Well, coming up, South Africa says it's built a fiscal buffer strong enough to withstand global shocks like the Iran war. We'll bring you the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. The U.S. State Department announced plans to help evacuate Americans who want to leave the Middle East amidst the war with Iran. In a statement, the department said it would send chartered planes for citizens seeking to leave the UAE, Saudi Arabia, and Jordan. It's also offering ground transport for people who want to get out of countries whose airspace has been closed. Airlines around the globe are suspending more flights to additional destinations across the Middle East as the scope of the war expands. According to Flight Radar, the disruptions have led to more than 12,000 flights being cancelled, including at major transfer hubs such as Dubai and Doha. South Africa says it's built a buffer strong enough to withstand global shocks like the Iran war. Treasury officials say it would take a very large shock to derail the country's fiscal plans. Our chief Africa correspondent, Jennifer Zabazaja, joins us from Johannesburg. Well, today, the big theme of the show, Jen, has been how what is happening in this part of the world is beginning to have global repercussions, particularly as it pertains to commodities prices. How much of a buffer has South Africa built up here? Fiscal buffer.
Right, Jumana, if we just take a look at what we are hearing from Treasury officials prior to the weekend's escalations, they had really been on this roadshow, really showing that South Africa had turned the corner and potentially were on a path to stability. Now they're trying to continue on with that message. Of course, the situation has changed quite a bit. So we spoke to the Director General of the Treasury, Duncan Peters, and he said, yes, it would take quite a big shock. And they're projecting actually a primary surplus still of about 131 billion Rand in the fiscal year through March of 2027. That still is going to stabilize South Africa's debt to GDP. And then that even is about 60 billion Rand more than the fiscal surplus that we're seeing in this year. What Duncan also, though, did tell us is, yes, it would take a significant shock. It would also potentially take something like an increased amount of government spending in around 60 billion Rand more of government spending that would derail this path of stability for South Africa. So still trying to put out this message that there is still stability in the economy, especially if you take a look at the period in which prior to the weekend's events South Africa had been on. We, of course, saw the Rand strengthening before the Iran war, and also this era of poor public finances, from former President Jacob Zuma. They were trying to put on this front that really the country had turned a corner. But I think, as you've been talking about all throughout the show, is there's still quite a bit of unknowns, and especially when it comes to crude and fuel prices here in South Africa, that is the big concern, and so that's really what the Treasury is at least trying to put out forward in terms of messaging at this point.
Yeah, how sensitive are South African finances to the price of oil, and what is the scenario if oil prices keep trending higher and stay at these higher levels?
That is the real concern. South Africa is a net importer of crude. And so, all analysts and of course, economists, are very closely watching what is happening to the price of oil because that will directly translate into higher prices at the pump here. And that could curtail household spending, especially at a time when, again, we are seeing the Treasury and a bit of stability in terms of the economy here. The concern is that then that begins to spike inflation. And so what we did actually hear from the Director General of the Treasury is that he and the team are watching very closely what is happening to the price of crude as it continues to trend upwards. But he did offer a bit of optimism in his messaging to us, saying that potentially if we do continue to see higher crude prices, potentially that could be absorbed, some of those shocks could be absorbed by higher gold prices and other commodities that South Africa exports. But still, the real concern is how this then trickles down to the South African consumer. What does that mean for the prices at the pump? And what does that ultimately mean for this messaging of a turnaround for the South African economy?
Jen, thank you so much. That was Jennifer Zabazaja, our chief Africa correspondent in Johannesburg. All right, let's turn to markets because what we are seeing is a major risk-off day across the board. S&P futures down 0.5%, Nasdaq down 0.7. European markets relatively outperforming, down about 0.1%, but this after a substantially negative session yesterday. The Euro Stoxx 50 ending the day down more than 3.6% yesterday, and the handover today from Asia Pacific indices really speak of some very intense profit taking that's been going through, especially on the KOSPI index. It is down more than 10% in the last couple of days. So keep an eye out on how this all transpires throughout the European session. Very much risk off. And that is it for our show. I'm Jemana Bersecci in Dubai.